Bitcoin is tanking. We are in the upper 70,000s. And once again, the sky is falling. We're going to zero. It's going to be Black Monday. Time out. Take a breath. Let's look at the charts and see what's going to happen. All of that and more in today's Sunday setup. Let's go. What's going on, everyone? Jeremy Ritz here. Courage pays better than fear trading. Here to get you ready for the first week of trading in February. We have a lot to cover here. We're going to get into the February calendar. We're going to see the data that's on tap for this week. Earnings this week. We'll get into the charts. So much to cover. Let's not waste any time. Let's get to it. All right, so let's start with the February calendar. I like to put my calendars together to be organized for the month. And it is Valentine's Day, so make sure that you get something for your special someone to let them know that you love them and care about them. We have 19 trading days this month, and let's hop into it. The first week, we're going to have some strong bullish sentiment that historically has shown up. Again, this comes from the concept of seasonality in the Stock Trader's Almanac. And the first 2 days of the month, we have bullish sentiment, as is Thursday. We have bullish sentiment on Thursday. And then Wednesday, smack in between there, we have bearish sentiment. Now, things are leaning bearish, as I'm going to talk about as we get into the charts. But just keep that in mind that historically, this is a strong month for the bulls. Excuse me, strong first week for the bulls in February. In terms of data, on Monday, we're going to get ISM manufacturing, PMI, Tuesday, JOLT. And then on Wednesday, we get ISM services. And then at market close, we are going to get the first of the big earnings report this week from the Mag 9. None other than Google, which has been on a tear. We'll look at that chart a little bit later. And then when we head over to Thursday, Amazon's going to report at market close. Another one really has been range bound. We'll look at their chart as well. What are they going to do? They popped the last time they reported earnings. And then on Friday, we have a very big day. We get non-farm payrolls, unemployment rate, and Michigan consumer sentiment. So it is a pretty packed week in terms of data. We're going to get a lot of insight in terms of what's happening with the labor market, and we have two major earnings reports. And oh yeah, I forgot too, on Monday, Palantir is going to be reporting as well. It's going to be a fun week. Now let's take a look at what the rest of the month has in store for us when we shift over to part 2 of February. On the 9th, we have bullish sentiment as well. And that also holds true for the 12th and the 13th. So the first 2 weeks of February are particularly bullish. In terms of data, on the 10th, we get retail sales. And on the 11th, we get our first inflation report for February. We are getting CPI, Consumer Price Index. That's going to move the markets. Let's see if that's going to come in hot. And then on the 12th, we get existing home sales. When we flip over to the third week, yay, the market is closed. So I can let my brain relax for an extra day here. So looking forward to that. That is President's Day. And then we really get into the second half of February, which is a bit weaker than the first half. We start off with some bullish sentiment there on the 17th. And then on the 18th, we get a glut of data here, building permits, housing starts, durable goods, and we get the Federal Reserve meeting minutes. That's going to come out at 2 p.m. And then on the 19th, this is where things start to flip. We get our second bearish sentiment day of the month. And that is followed by another bearish sentiment day on the 20th, which happens to be options expiration, or OpEx as they like to call it. And then we also get a slew of data here: GDP, PCE, personal spending, and personal income. So that short week, those 4 days, a lot is crammed in there. So expect some volatility and some excitement as well. And then when we head into the final week of February, we kick off with another bearish sentiment day. We do have a bullish sentiment day that Wednesday, which just so happens to be NVIDIA earnings. So pay attention to that. We know that's going to move the market. And then on Friday, the last trading day of February, I hate these short trading months. 19 days. Come on. I like the 22s, man. Let's get one of those. March will deliver in that respect. But anyway, we close out with bearish sentiment on the 27th and a PPI report. So that prepares you for Valentine's Day. And may it be a lovely month for you in the markets. Now, what about earnings this week? It is a big week, and I talked a little bit about it when we were reviewing the calendar for February. But it all starts tomorrow. We are going to get Palantir, and let me get my little handy dandy pen here to circle it. Palantir on Monday at close. It's been getting slammed. It's below the 200. We'll look at that chart here in a second, but that's going to be a big report to pay attention to. On Tuesday, what I'm going to be watching, we have AMD, who at one point, do you remember when they were known as the advanced money destroyer? How things have changed. They touched their old all-time high, which was pretty recent, but they're going to report Tuesday after close. You also get SMCI, Supermicro Computer, and Chipotle, which I'm interested to watch. They've had some tough times here recently post-split. And then when we head over to Wednesday, as I said earlier, we are going to get Google, who will be reporting at close. So another one of the big boys from the Mag 9 is going to be delivering results. They've been on a significant tear higher. Let's see what they give in terms of forward guidance and if there is optimism, positivity for what's ahead that the market could rally off of. You also have ARM reporting. Qualcomm is one worth paying attention to. And then we head into Thursday. We get another of the big boys. We get Amazon. And remember, the last time they reported, they shot up, spiked higher. So that's going to be a fun one to pay attention to. You also have MSTR, and with Bitcoin getting slammed, we'll see what's going to happen with them. We'll take a look at the Bitcoin chart here in a second. And then you also have Roblox company I like to follow. They have just been getting smashed to the downside. It is pretty crazy to see how much they have fallen in a short period of time. And so those are the major earnings reports I'm watching, and I'm excited to see how they all play out. All right, so we are going to get into the charts, but I do want to start with this because a lot of people are asking, where is this downward pressure that we saw on Thursday and Friday coming from? What is happening? And just to rewind to last week, we had the Jerome Powell presser, which really was a nothing burger, but rate cuts are going to be on pause for a period of time. And we had a hot PPI report that came in on Friday, and there's an uptick in inflation, which can put a damper on rate cuts being expected in 2026. But then we also got this news that Trump finally announced who his next Fed chair is going to be, who will take over for Jerome Powell. Remember, Jerome is done in May. Papa P will be finished, and it's going to be none other than Kevin Warsh. This is a name that I've talked about on the channel since this summer. He has been nominated, and he brings with him a track record of being hawkish, of being restrictive in terms of rates, not being a believer in quantitative easing, even though recently he has said that he supports what President Trump wants to do in terms of rate cuts. So this is an interesting selection, and some are saying that this is the reason why we're seeing some additional pressure on the market to the downside. But remember this, the market always needs something to worry about. It needs something to support its narrative. And if you just look at where we are on the charts, we are super extended. We are desperately due for a pullback, for a correction. And it's just a handful of companies that are propping this thing up right now. When we look at the charts, you're going to see that very few of them are in uptrends. A lot of charts look really awful at this point in time. And so being that we're so far elevated and extended, any type of negative news, negative catalyst out there can be used to drive this thing down. And because Warsh has a bit of a reputation as a hawk, let's see if that wants to continue and follow through. And also keep in mind, there's geopolitical tension that is still in place between Iran and the U.S. That's going to escalate at some point. You still have the tension between the U.S. and Venezuela. Just last week, we had the Greenland U.S. issue. We have the new tariffs being smacked on the EU. So there's always something, but at some point the market is going to get tired of the constant barrage of uncertainty, and it's going to say, you know what, we're taking our ball and we're going home, and the conditions are set for that to potentially happen. And so let's jump into the charts. We are going to start with the SPX, and you could see here, let me switch over to the daily chart, that you did have these big significant moves down on Thursday, Friday. So let me pull those up. So this was Thursday. You could see the big drawdown that we had here. Buyer stepped in at that 68.71 mark, pushed this thing back up. And then on Friday, really same kind of thing. We sold down. Now, we did make a bit of a higher low from the low on Thursday, but it was still rather weak. And you did see quite a bit of selling volume come in here at the end of the day. And just looking at this chart here on the SPX, and I want you to take a mental snapshot of this as we start to look at other charts. We are extended. We are, if you look at where we came from last year's lows from the tariffs, and that's just a rip. But it looks like this thing is just getting ready to roll over. We nearly came down and tested that 50 SMA on the daily. Didn't quite get there. Buyers did step in. But honestly, we've been range bound for a period of time, and any sustained push or rally can't be held. And the market's pushed into 7,000 here on the 28th ahead of the Fed meeting, ahead of Meta, Microsoft, and Tesla earnings. But that could be the interim high here. So I'm going to mark that out just with an arrow. And we could be looking at the correction starting here soon. And notice too, we saw this uptick in bearish volume. We see that the momentum is waning here on the RSI, and this thing just needs a rest. And I'm not talking a rest down here to the 50 or even the 100. I'm talking it's got to come down 10%. So below the 200, can we get a 15%? Can we reset this thing so we could start the next leg up? I'm not saying that's going to happen right away, but you have to have your head on a swivel because it is going to come sooner rather than later. And I think in terms of probabilities, we're looking at more of a 10 to 15% drop here before we're looking at a smash higher. Now we could tag 7,200. This is what I have on my chart here before we start an actual correction, but just be prepared because this market is looking a bit exhausted and tired. And so really the line in the sand is the 50. We broke through it back here in November, rebounded, retested it in December, pulled it back up, retested it here in January. If we break back down through that, look for us to catch a little bit of a bounce here at the 100. But if that can't save us as the line in the sand, we are at least minimum heading down there to the 200. And that would make it about an 8.19% pullback. That's not a true correction. We'd want to see that 10% at 62.97.71. So that's what we have there on the SPX. Let's go take a look at the Qs here. You can see this thing nearly got back up to its all-time high in October, but couldn't hold it. 3 bear candles in a row. You had some buying that came in here on Thursday after that big drop down to the 50, but you had another red candle here on Friday, uptick in bear volume. And really, this thing's just stuck. We are sitting on the point of control here, but down below, if it could get below that 50, then you have the 100, which has served as a support here 3 times. If it breaks this, there is really nothing holding this thing up until you get to the 200. If we would come down from the all-time high to the 200, that would be 10%. So we'll keep an eye on that. We'll go over to the Dow Jones Industrial. We are below the 10-day exponential moving average, nearly down here to the 50. We saw an uptick in bear volume as well. This one looks like it's going to keep pulling back in IWM off of that reversal candle that we had last Thursday and that bearish engulfing on Friday. This thing just rolled over and we are now below the 10. And let's see if it wants to come down here and tag this 50. And what does it do there? Does it push through down to the 100 and find a bounce, or does it drop all the way through and come down and retest the 200? So we know the key levels that we need to watch to see if we are going to get some follow through with the selling. Now, Bitcoin. Oh my God, I got to pull this up too. I don't know if you guys ever look at this, but here, let me make sure that I'm not blocking these comments. I'm gonna have to move myself over here. There we go. But you can see here, so if you come down here and you click on the news headlines and you click on mines, you just see some of this stuff that people post here, and it's funny. And the ego involved in this, it's good for laughs. I have to share some of this because everybody acts like they know, like they have the crystal ball, what's going to happen. Bulls, you got to defend this zone or else you won't see this zone again. It will literally leg down to 60K. If dropping like this, when futures open, do we think gold and silver will feel the same pain? Beautiful fake out, 50K coming to an exchange near you. Weekly 200 EMA at roughly 68,300. 200 SMA just under 58K. Good luck. Snarky. Another leg down and coming. This time towards 65K. Gloom and doom. The FUD. Would a U.S. attack on Iran be bullish or bearish for Bitcoin? Time to ask yourself that question now from Mr. Anonymous Investor. Or how about this one? Darude one. Remember, guys, buy the dip, dip, dippity, dip, the dip, dip. That's great analysis right there. So if you're looking for just some humor and some ego for people like here, this was so predictable. I'll catch the falling knives at 50. Come on. Can we be humble? Can we have market humility and not act like you're a know-it-all? But if you're looking for something to get a laugh at, go check out the mines, the trading view section for different tickers and for Bitcoin. And it's so funny to see that happening here on this chart. But if we do take a look at Bitcoin, let me move myself back over here. We could see that, yes, we are still in a decline, right? We're down 40% right now. We put in this low here this weekend around 75,547, and we are selling down as I'm speaking here. And I have 3 areas of support marked out here at 71,573 and also at 68,259.24. And you could see if we fell below that, what it would take to get down to a 50% retracement. That'd be at 62,759.32 cents. So that bear volume has spiked pretty hard. So there is follow through here. This move is likely not done, even though we are oversold on the RSI. We're actually getting close to where we were oversold during that liquidation event back in November. Let's see if that wants to come down a little bit more. Again, with that uptick in bear volume, it probably is going to happen. So what I would want to see for at least some stability or short-term support and interim bounce is a massive spike in volume, similar to what we have here that says, all right, for the time being, this drop is over, and then we get a little bit of a retracement. So look for a big volume spike to come in, some capitulation to indicate maybe stop for now, but Bitcoin is going to come lower. Okay. But again, I don't trade Bitcoin. I'm just a long-term holder and buyer. I've been buying on the way down in little increments, and I'll continue to do that as it falls. But you can see here too, on the weekly, we got below that 100 simple moving average, and we're coming down to the 200 EMA, which lines up with that 68,000 mark. And you can see that 200 on the weekly, Bitcoin hasn't touched that price area. You'd have to go back to 2023. So it's been quite some time since it's touched the 200, but it very well could come down there. That would be lower than 50%. So just keep an eye on this chart, pay attention to it. There's definitely going to be some weakness here. It's interesting, but there's no need to slam dunk on somebody if you're a bear and you made some money off a short here and say, bulls, nah, just have some humility here. Okay. But anyway, I like it. It's on sale, man. I'm definitely buying some. I'm scooping some up. Let's take a look at a few more charts here, looking at TLT. Again, that head and shoulders pattern. We've just been chopping here in this gap that it filled, that it was created back in September. And then we did get some selling of bonds that came in on Friday, and we know that props up the yield. So that yield is a little bit higher right now, to the dismay of people who want to buy a home or refinance their mortgage. And then the dollar, that head and shoulders pattern played out significantly, dropped very hard here on Tuesday, but then we did see a spike and a big bullish engulfing candle on Friday. So let's see what happens with the dollar. The VIX looks like this thing is getting ready to spike. I would not be surprised to see a pop here on Monday, but you can see that we are making higher lows. We've tried to get above this 200 several times. We couldn't hold it, but with everything that's transpiring right now, the naming Kevin Warsh as the Fed chair, if we look at where the charts are, if we look at that PPI report that came in, if you look at the discussion about the AI bubble, all those things are lining up for a pullback, for a correction. And then you see Bitcoin selling down like it is. I would not be surprised at all to see us open with a gap down on Monday across the board on all of the indices, and we see a spike in the VIX. And we probably won't see that remedied or relieved until we maybe get some commentary from Trump about Kevin Warsh, or until we get the results from Google or Amazon. But really, what would be needed right now to blast this thing off to keep this market pushing higher is some unseen catalyst, something about AI that people didn't even expect to be coming to fruition. But it's just so hard to see that. The market looks tired. It is due. Everything is shaping up for some more downside action. So just be prepared for that. That's at least how I'm playing it. And then we'll take a look here at gold. Really, all the metals. You had this long leg doji that came in here on Thursday, indicative of a reversal, massive sell down there on Friday, and gold taking a little bit of a beating. Now, some people are saying, hey, are we going to see a rotation out of gold, out of the metals into the crypto space? But we haven't seen that yet. So definitely keeping an eye on where things could potentially go. And then one last thing, let's just come back up here to the SPX. If we just zoom out, I just want you to be aware of these levels. So if we drop down 10%, what would that area be? It's going to be about 62, around 6,300, 6,298. That's 10%. 15% would be 59, 55, 31. 20% would be 5,600. And 25% would be 52, 50, 26, which would bring us down near the lows from last April. So again, anything down below 20% is a bear market, but just keep these areas clear in your mind, because if we do start coming down here, there's going to be some good value plays, some good opportunities to load up. All right. So that's a look at the broader markets. Now let's just take a look at the Mag 9 and what's happening here. So Nvidia, I mean, it's just been range bound, right? You have this overhead gap that needs filled, that was created back here on November 3rd. It would need to hit around 205 in order to fill that. You've got lots of upper wicks coming in here. It's trying, but doing a whole lot of nothing. It's above all of its moving averages. Let's see what happens tomorrow. They don't report earnings to the 25th, but really just a lot of sideways movement there. Broadcom, AVGO, still has yet to fill that gap at 308.36. Thought that it was going to do that there on Friday, January 23rd. It didn't happen. It got very close. It has since pushed back up, but the 10 has been serving as a bit of rejection. It does have a lot of trash over top of it. We don't have an official earnings date for this yet, but it's looking like March 5th, so keep an eye on that. Tesla, taking a look at Tesla, they did have a little bit of a move higher off of earnings, but that didn't hold. You can see that they sold down there on Thursday. And then on Friday, there was some speculation that potentially SpaceX could merge with Tesla or the XAI Musk company. And so that caused a little bit of a push higher. But again, you have the 10, the 100, the 50 all above it, and you have the point of control and this large volume node, though you did have an uptick in bullish volume here. So let's see what this guy wants to do, but really just chopping along up here. Netflix doing a whole lot of nothing, still down below that 200. And just looking over here to the left, you can see it's in a price area where it's found a bounce before. So we're actually down near the lows from last April with Liberation Day, where it got a bounce, and it also got a bounce in this area last January. So let's see if Netflix finally wants to get going. Oversold there on the daily. Taking a look at Microsoft, this double top just played out to perfection. Bang, smoked down, pushed back up, retested the 200 here, and then crushed on earnings. And this thing is probably headed lower. There's a gap to fill down here at 397.07. And that was from back following Liberation Day. So keep an eye on Microsoft. It looks like it wants to come back on down. Amazon is making higher lows. It's making lower highs, and the price is compressing. It is, let's see, is it above? It's above the majority of its moving averages. It closed below that 10 there on Friday. And who knows what's going to happen with this one on earnings. The last time that it reported, you had this huge gap up, but it couldn't hold it, and this thing dropped right back down. Do we see something else like that? Or do we see a rotation out of a Google into Amazon? Quite possibly, but no edge for me here as I'm looking at this chart. Taking a look at Apple, head and shoulders pattern playing out to perfection. Little movement positive off of earnings, couldn't hold it, pushed up, got rejected off the 100. This thing looks like it wants to roll back down. You do have a gap to fill down here at 234.56. I'll be watching to see if that can get filled. But we did get some nice volume that came in here. So let's watch to see what happens, because Apple typically isn't a big mover off earnings. It's the few days to weeks after it. So let's see if it wants to push again. That's pretty interesting. I didn't notice this the first time that I looked at the chart. And then you have Google. What I pointed out here is that even though the price is rising, the volume is declining. The RSI momentum is declining as well. So do we get a correction and a pullback on Google? They are going to be reporting earnings, and they've just been on a tear since, really, you got to go back to April. It's just been pushing higher. So let's see what's going to happen here with Google. Let's see if it wants to come down and we get some rotation into some other companies. And then you have Meta, beautiful double bottom here off of this trend line. If we draw that back to April, we got a nice push higher. I don't like how that 100 is crossing down through the 200, because that can be indicative of a bigger drop. And it filled this gap to a T. Look at this. This is crazy. This is how spooky the markets are. Look at that. Filled that gap. And then the day after, we got this bullish or bearish candle that came in, inside candle. It looks like it's going to come down a little bit lower. Let's see if it wants to do a little bit of a retest down to the 200 or the 100 and then push from there, or if it's just going to give all this back and roll over, especially if the broader markets decide that they want to tank and drop. So that's the Mag 9. Now let's take a look at a few more here. The trade desk, man, this thing just keeps on falling, and it doesn't look like there is any end in sight. You do have 3 other layers of support here that we can watch at 31.29, which it broke through that on Friday. You have another one here at 28.21. And if it breaks below 28.21, it is coming down to 18.34. So this company is just in a lot of trouble. They got rid of a CFO that they hired in August, and they named an internal candidate as their replacement while they look for somebody full-time to replace here. But there's questions about the leadership. There's questions about their ability to be competitive in the digital ad space market with the walled gardens, Meta, and Amazon. And so there's lots of downward pressure here on the trade desk. And you could see 5 bearish days in a row. We're oversold. The only positive here, I believe, and it's not very strong, but on the monthly, this was the lowest amount of bear volume that we had come into the trade desk since June. So does that mean that maybe the bears are losing steam? Possibly. But I'm just fascinated by this chart, and I'm going to continue to watch it. I have been slowly accumulating a small position over time, knowing very well that this is going to keep coming down and falling. But I've been enjoying the journey here to see how this one is going to play out. And then we have Robinhood, broke down below the 200-day simple moving average. It will be reporting earnings on February 10th, but there's nothing to hold this one up. You do have that weekly 50 right there at, what is that, 93.71. So let's see if that one wants to continue to drop. And then MSTR, I can't see a scenario where this thing does not gap down tomorrow. And significantly, there's been talk about if Bitcoin keeps dropping, does that mean that MSTR is going to go bankrupt? Michael Saylor says no. He says that they'll continue to buy Bitcoin, but it's not looking good for MSTR. Look how this thing is just getting smashed. Man, here's the thing though. If Bitcoin could ever get running again, this one will get a lift. When will that be? I don't know. So there is that risk to reward available. We just don't see anything on the chart that tells us that's going to happen. Let's go through a few more here. MU, finally, we get some selling on MU, pushed up. Hanging man here on the daily, nice big bearish candle. They came in, uptick in bear volume. If this thing wants to retest a little bit, I'll potentially look for some longs. I day traded the snot out of MU in January successfully, so I'll keep looking at that. Palantir, here's another interesting one. Down below the 200, we are at price levels where we were. We'd have to go back to August. And right now, the percentage that is corrected from all-time highs is 30%, which isn't huge. So this one can fall further. If you head over to the weekly, you can see that we're right there on that weekly 50. The next weekly moving average we have is right here, and that is at 95.19. That's your 100. So it's going to be interesting to see how Palantir reports there on Monday. And then when you start looking at the high beta speculative stocks like SoundHound, these things are just getting crushed, right? Broke below this trend line here. 1, 2, 3 bear candles in a row, oversold. But when you compare charts like this to the SPX that are at all-time highs, you have to ask yourself, man, how much further can these things come down? Here's the thing. If the SPX corrects, all these other high beta stocks are going to come down even more, right? So just keep that in mind. Or you look at it, HIMS, look at this. This thing is just getting smashed. Bearish engulfing that came in there on Friday. But you look at this chart, then you go back and look at the SPX. It's like, what in the world is going on? Who's carrying this market? And again, it's the big boys, right? We haven't seen, there's no trust in these speculative stocks right now because of higher interest rates for longer. And so until there's some certainty around that, we're going to see more downside. UNH, they got smoked this week. There was a report that the administration was going to lock in a rate related to health insurance, what would cut into their profits. And then they forecasted weak revenue in their earnings report. So you saw that massive gap down. And there's a gap to fill down here at 273.39. I own this company long-term in my portfolio. I don't need this money for 20, 30, really 30 years. So I added a little bit this week, and I will continue to add as it falls. But this one more than likely is coming lower and is going to fill that gap. But again, look at this chart in comparison to the SPX. Let's just go take a look at a few more here. I got so many on my screen here. Oil has been ripping. Kudos to any oil holders, because this thing was just struggling for the longest time. It had this supportive trend line that was in place, ripped to new all-time highs. It continues to push up. This is a result of what's happening with the US and Venezuela. So that is moving higher. And let's see if there's anything else that I want to pull up and look at. I believe that's it. Guys. So we're gonna stop there. But again, very stark contrast between what we're seeing, the broader markets at all-time highs, but a lot of stocks just getting crushed. It's mega cap, just a handful of mega cap tech companies holding this thing up. So we'll see what happens. Let's come back over to Bitcoin. It is starting to sell down even more. We're down into the 76,000 area. You can see right here on the 3-minute, we're dropping lower. All right, bring it on down, baby. Let's go. And I'll be loading some orders. So there you have it. You are set for this week in the markets. Expect some downside pressure. We are extended. We are overdue for a correction. Let's make it happen. Let's get that pullback. Let's get a 10, 15, 20% corrections. Let's reset values across the board. Let's flush it. Let's do it. And let's make some money on the downside with some shorts. And when things settle out, when we hit a bottom, whether that's going to take some time to do it, then we'll be in a position where we can buy some great values, get some things on sale. So let's see if that's what's going to happen. Again, expect a gap down tomorrow. That's what I'm looking for. Check futures at 6 p.m. to see what they're indicating. But in the meantime, in between time, thank you so much for watching the Sunday setup. I appreciate you guys so much. Make it a great day. Honor the moment. And as always, be grateful. Thanks everyone for tuning in.